Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, January 11th, 2021, and I'm pre-recording this Trading Places Live for Tuesday, January 12th. Futures currently are slightly higher, a little bit better on the NASDAQ than on the Dow and S&P 500. And this comes after U.S. equities were roughed up a little bit on Monday. We'll go through all that in just a moment. First, let's take a look at the agenda for today. Got the daily market recap. Going to get into talking technically. Maybe one little minor short-term thing we need to pay attention to this week. Could see a little bit more selling. Then I want to get into scanning. Max pain. That's something I always look at every month as monthly options expire. Then we'll take a look at industry rotation, earnings spotlight. Starting to get a couple of earnings reports coming in. The big day, of course, will be Friday when the banks begin to report. And then we'll wrap up the show with the 3 you must see. Before we get into any of that, though, let me take you over to earningsbeats.com. Just want to point out, you can sign up for our free Earnings Beats Digest newsletter. All we need, your name, email address, hit the subscribe button. This does come out 3 times a week, Mondays, Wednesdays, and Fridays. There's no credit card required. You may unsubscribe at any time. Check out our portfolios while you're there. These portfolios are based on putting together 10 equal weighted stocks from 10 different industry groups. At the beginning of, well, not the beginning of each quarter, it's the beginning of our quarter, not the calendar quarter. So our quarters start on February 19th, May 19th, August 19th, and November 19th. That's usually at the end of earnings season, so that we get a really good grasp of all the companies that have reported. And then we pick out literally our favorite 10 for each of these portfolios. And you can see the results have been absolutely stunning. If you'd like to take out a trial, we do offer a $7 fully refundable, $7 30-day trial. So you sign up, you pay the $7, we'll refund it back to you within a week or so. So literally you get 30 days for free, and you can check it out. I think it would be a really interesting way maybe to round out some of the things that you do in your own trading routine. I think we probably have some things that we could offer that would help you in your own strategy to try to beat the S&P 500. All right, let's move on. I want to talk a little bit about what happened on Monday. Mondays typically are bearish. I don't know if you know that or not, but Mondays on the S&P 500 since 1950, the annualized returns, or the annualized return for all Mondays, minus 15%. All Mondays since 1950. And they might say, well, it's just one day a week. Well, it's one day a week for every week for the last 71 years. So it's almost 1/5 of all trading days, pretty substantial. Anyhow, Mondays typically not good. I think that the odds of a Monday going down are about 53%, going up about 47%. So don't look at it like every Monday is going to be down. Like I said, about 53% of the Mondays have been down, but we do tend sometimes to get some big sell-offs on Mondays, and that's what's really weighed on that return over the years. But anyway, Monday, January 11th, 2021, not a great day. Dow Jones Industrial Average down to 89, the S&P down 25. NASDAQ was beaten up pretty good on a relative basis, losing 165 points. That was a 1.25%, much more than we saw on the Dow and the S&P. Mid caps and small caps actually did well today. So we did get some gains in the mid caps and small caps. We're looking at the sectors. I've got 5 of them down here for you. The first 2 actually had pretty good days. Energy and healthcare both did pretty well. You can see energy finishing at 42.07, taking out that prior December high. That was good news. Healthcare also recently breaking out. So we've got, this is kind of typical. It's a hallmark, really, of a secular bull market. Everything participates. It's not that certain areas go up and others go down. Most areas go higher in a secular bull market, but you want to pay attention to that relative strength. So even though discretionary communication services both got hit today, you can see both down more than 1.75%, which was one of the main reasons why we saw the NASDAQ so weak. Both of these groups are in nice uptrends. Now, communication services has been consolidating a little bit longer, but I actually think that's bullish when you make the breakout. You can see back here, we had consumer discretionary going sideways for about 5 weeks, finally made that breakout, and it was a pretty strong move to the upside. I expect the same thing from communication services when we get the breakout. Real estate, also a weak performer, back down to just around that 35 level, pretty close to gap support. I'd like to see real estate move back up off of this gap support, get above these moving averages. If it fails to hold 35, I think we could be looking at this double bottom back in the 33s. So real estate, definitely one of the big laggards in the market of late. All right, moving on to the 10-year Treasury yield. No big economic reports out or due out on Tuesday, but you can see what's going on. Money is rotating out of Treasuries. This is ultimately a very, very positive signal for equities. Just about any time you see the 10-year Treasury yield rising during a period of time, usually the S&P 500 rises with it. So as the money rotates out of Treasuries, I would not be overly bearish U.S. equities. All right, let's keep moving. Let's move into talking technically. I want to pull up this S&P 500 chart for you. It's a 3-month chart, 60-minute, so it's an hourly chart. And one thing I just wanted to point out is as we made that last high back at the end of last week on Friday, you can see the PPO rolling over. Now, this is a short-term hourly chart. So a negative divergence on an hourly chart might lead to 1-2 days of selling. Maybe today started it. Maybe we'll, gap up tomorrow and then sell off, and maybe that'll be it in the near term. But what I look for, and what I would look for here, is maybe somewhere down around 37.50 to 37.70. I think this area right in here is short-term support. Now, if that gets broken, then I think you got these other lows down here that we'll want to pay attention to. But let me annotate this for you real quick, because there's a pretty good channel that's in play right now. If you take and look at these highs right here, didn't quite touch these, but close. So the high here and the high that we saw on Friday. But the interesting part is if you grab that line and you drag it down and you look at the other line that was established here, or the lows, this low back here earlier in November, and then the low just about touches the low from December 21st, and then the low to open the year. So we've got a nice channel here. So if we were to lose that 37.50 to 37.70 area, then I think we could be looking back down closer to 3,700, and then even possibly on an intraday basis, maybe back down to challenge one of these lows, maybe the 36.60, 36.70 area. But I'd be surprised if we see a close much below 3,700. I believe the market will continue to hold that. Now, if we do move up in the near term, I think there's still some reason to be a little cautious here if we move higher. Because if we move off of this 20-hour moving average and break to a new high, chances are we're going to have a pretty nasty looking divergence. So if we do that, we're going to want to really be careful. We've got a big event coming up on Tuesday. I'm going to talk about that in just a minute. But the event's over at Earnings Beats. It's a monthly Max Pain event, and it can provide some really good signals and has provided some great signals for our members in the past. But I'll talk about that in just a minute. Just keep in mind, if we do move higher again, we're probably going to be dealing with this negative divergence on the hourly chart, and that could be problematic as we work our way through the week. All right, let's move on to scanning. Now, I ran a scan, and in this particular scan, what I did is I looked for stocks that had scooters above 90 currently, but 2 months ago, just as the vaccine news was first coming out, if you recall, that came out on November 8th, so it was just a little bit more than 2 months ago, I ran in, as part of the scan, scooter above 90 now, scooter below 30 back then. So if a stock was below 30 back then, but now it's above 90, essentially it's just giving us a list of stocks that have done extremely well the last 60 days since the vaccine was announced for the virus. And these are stocks that may continue to do very well. I mean, think back to when the pandemic first hit, when we saw stocks like Zoom and Peloton make those first moves up, and you're thinking, they can't go any further. You know, Zoom doubled, you know, went from 100 to 200 or whatever. Who would have thought it was going to go to 600? You know, Peloton, it was probably $20 and then it was 40 or $50. Who thought it was going to go to 160? You know, so just keep in mind that these stocks that are now starting to get some love from Wall Street, they may not be done. I'm not going to say every stock on this list is one to consider, but some of these, and I'm going to point out a few of them that look interesting to me, but I'll scroll down here just so you can come back later if you want, look at the recording, and you'll be able to pull up all these stocks if you'd like. But the ones I want to show you are first, Discovery, DISCA. Couple things I really like about this stock. Number one, the accumulation distribution line is off the charts. This is a stock that is being, in my opinion, very, very heavily accumulated. Look at the volume that's come in throughout this move to the upside. The other thing you have to understand, when this volume is this big and the price action is almost double what it was before, think about the dollar volume. That's just share volume. But the true amount of dollars coming in, when you've got a higher price and you've got higher volume, the dollar volume is going to swamp anything we've seen throughout 2020. So I think there's a lot going on here. And I've been telling members, and I've posted in some articles as well, but broadcasting and entertainment is one of my favorite areas in the market. We saw the breakout with the vaccine news back on November, I think I said November 8th. It was November 9th. But there was the big move, the breakout in broadcasting and entertainment stocks back then. And look at DISCA relative to its peers. I mean, it's going straight up. And look at what broadcasting and entertainment stocks are doing relative to the S&P. So we've got a lot of relative strength, and this is one of the strongest stocks in this group. So I really like DISCA. Now, do I want to chase it? Not necessarily. I'd feel a lot better buying this stock on a 20-day test, so watch that. But this is a stock I definitely keep on my radar. Next one, RRGB, which is Red Robin Gourmet Burgers. Again, look at that AD line. AD line has been very solid for the last 6 months and just flattened out while we've been sideways consolidating. But another very strong day on Monday. Volume ticked up a little bit. Really good hollow candle there. Restaurants, they're moving higher on a relative basis. They haven't been great the last 60 days, so that's maybe a little bit of a negative compared to what we just looked at with broadcasting and entertainment stocks. But Red Robin just set a new 10-month relative high versus its peers, just, you know, within the last few days. So this is a stock that's starting to gain a little bit of strength in its group, and it bounced right off that 20-day. Another breakout here would be bullish. Third stock I'll mention, and this is in the energy space. This is SM Energy. Again, look at the AD line, surging, price action, surging, relative strength off the charts. And this is a group that's been showing some relative strength. I mean, we're talking about the group relative to the S&P 500 being at about a 6-month relative high. So energy's starting to make a little bit of a move. I'm not ready to, you know, overly commit. In fact, I'm not a huge fan of energy. But if I'm going to trade a stock in the group, really any group for that matter, I want leaders. And look at the relative strength of SM relative to its energy peers. Also during this move, look at that volume. Volume's been very strong. AD line strong. It's another one looks good. And then the last one I'll give you here for this particular scanning strategy is Trip Advisor, TRIP. Once again, look at the AD line breaking to about a 10-month high. Price action breaking out looks very strong. Again, the volume since that November 9th news, big move up, came back down, held the gap support area, and then broke back out again. Once again, it's got price support now around 31, that rising 20 days just under 30. I would be looking for a 20-day test, but this is a stock, look at it relative to the internet space. I like internet, and Trip is now moved up to about a 10 or 11-month high versus its peers. So this is a stock I think that's really starting to show some really good strength. All right, let's move on. I want to talk about Max Pain. Now, for those of you who are not familiar with Max Pain, Monthly options always expire the third Friday of every month, and there's a lot of them. And it behooves market makers. And I've never worked for a market maker, so I'm doing a little bit of, just projecting what I believe. But there's a lot of money on the line in terms of in the money call premium, net in the money call premium on some stocks that have been rising. And you've got net in the money put premium on stocks that have been declining. In other words, traders, especially options traders, many of them are chasers. I mean, they see a rally going, move to the upside. And as the stock keeps going up, they get really emotionally attached to a stock and they jump in and leverage with options. And that can be a very, very risky proposition as these options expire. Now, as it doesn't mean that stocks that are going up have to come back down. As stocks are going up, this is Boeing. This was a stock that we talked about that you wanted to be very careful with. We mentioned it on Tuesday, November 17th. So options were expiring that Friday, which was the 20th. And if you look, we had talked about it when the stock was about 210, 211, something like that. That's where it closed on Tuesday. We had our session Tuesday after the bell, and we said Boeing is a stock you want to be really careful with. The next morning, it did gap up to about 222. And that day, it was back down to about 203. And within 2 days after that, it went down below 200. Now, this was the Max Payne line. This would have been the line where all of the in-the-money calls equal in-the-money puts. Now, I never talk about, hey, this stock's going to go down to the Max Payne level. I've seen it happen, but I wouldn't be looking for a stock to go from 220 down to 170 in 3 days. That's a little unrealistic. But I use the Max Payne as a directional clue for a stock. In other words, if there are a ton of net in-the-money calls on Boeing, as Boeing continues moving higher and higher into option expiration, the amount of in-the-money call premium just keeps building and building. Now, it doesn't mean that market makers are getting hurt, because anybody who's buying options through all this and making the money, of course, you got market makers on the other side providing liquidity, so they're selling the options. If that's all they did, they'd be in trouble because prices keep going up. But there's a covered call strategy. So if a trader says, I want to buy 10 calls, the market maker can sell those 10 calls and turn around and buy 1,000 shares of the stock and fully protected. So don't think that this is something where the price action has to go straight down. But if the market makers buy the stock when the options are bought, they make money on the way up. If they start shorting, they make money on the way down, and they wipe out that net call premium. So I've seen it happen plenty of times where it's a win-win-win for market makers. You've got to be really careful as you get close to option expiration Friday. And it's one of the big reasons why the stock market historically doesn't do well from the 19th to the 25th. If you think about it, heading up to options expiration and then the week after is where market makers are making their hay. And if you want to know why it would go beyond the expiration, well, if I hold 10 calls for a stock, I can exercise. I can buy the stock. So if I buy the stock, market makers are providing me the shares. They're still on the short side even after my options expire. So you got to be careful heading into option expiration Friday and into that next week afterwards. And that is historically, I can bring the numbers up to back me up on this. You got to be very, very careful as a trader on the long side. If you're in stocks that are heavily, if they have a lot of heavy volume in the options world, you need to be really careful. So anyway, we go through this on the Tuesday before options expire every month, and that's tomorrow, or when you're listening to this, it'll be today, Tuesday evening. So if you are interested, if this is something that you'd like to learn more about, I would encourage you, as I mentioned at the beginning of the show, you can take us up on a $7 fully refundable 30-day trial. So there's no cost for 30 days. This is one of our regular member only events that we do on Tuesday before options expire. So we'd love to have you. But let me walk you through a couple of these, because Boeing was one that we mentioned back in November. We gave out 2 stocks. One was Boeing. The other one that we wanted to thought everyone should be careful with was Baker Hughes. Now look at where Baker Hughes was on that Tuesday. It had closed at about 19 and I don't know, maybe 1940. By Friday's close, it was back down and hit 18, maybe even a little bit below 18. So again, did it go all the way down to max pain? No. But if you were going to buy the stock, don't do it. Wait. You're probably going to get a better price. Or if you're thinking about, oh, I'm going to jump into some options, I wouldn't do it personally. Not if I know that there's already a ton of net in the money call premium. I don't want to add to it. All right. Now let's fast forward to December. So these were 2 I gave in November, but let's look at December. One stock that I gave was Moderna. Of course, this is a wonderful biotech company. They announced the vaccine, the fact that they have the vaccine. Stock took off in November, but that created a lot of net in the money call premium. And so right here is when we had the meeting with our members, and Moderna was trading at about 147, I think, at the time. By the end of the week, it was around 140, but look into the next week. Monday and Tuesday of the following week, it was down to about 125. And you can see over the next several days, I mean, this one did come all the way back down and hit that max pain level, went below it, and now it's simply been going sideways since. So Moderna probably is not going to have the same issue in January that it did in December. But when you get these stocks that make this big move to the upside, if they're heavily traded in options, you've got to be careful. The other one we mentioned, this is another great one that I brought up, and that was Occidental Petroleum. Now, if you recall, beginning of December, energy stocks were on fire. And so right here, here's the move. Occidental Petroleum went from about 14 and change up to maybe 21 and change, 22. A ton of in the money call premium when we met and talked about it on this Tuesday. It was trading around 20. It had already come down a little bit that Monday, but look at what happened over the course of the rest of the week and into early part of next week. It was at 20 and it went down to 17, maybe a little below 17. I mean, that's a big drop. It's 15% in a very short period of time. And I can promise you, I forget how many millions of dollars were saved by every 10 cents that Occidental Petroleum dropped. But when it dropped $2.50, the net call premium dropped millions and millions and millions of dollars. You got to be aware of this. You got to know whether you want to get out of certain stocks based on the option activity. So anyhow, on Tuesday evening, Tuesday at 4:30 after the market closes, we will be having our next Max Pain webinar for January to talk about the stocks that you might want to be very careful holding over the next few days. So if that's something that interests you, you want to learn more about it, make sure you go over to earningsbeats.com, check that out. Next up, let's move on to industry rotation. I want to just bring up, I'm going to focus on consumer discretionary. It had a rough day on Monday. Some groups have broken out and some groups are consolidating in this space. So I wanted to just talk briefly about a couple of groups that are sideways consolidating. One, you're looking at it, home construction. Home construction, I know this goes against the grain and against common sense maybe, but December and January typically are very strong months for home construction stocks. We have not seen that. I mean, December and into January, this has not been very good. But we are hanging down here near this support area, which is just below 1100. And I wouldn't be surprised to see a move from here. We did have a strong day on Monday in home construction. If we get back above those moving averages, I think we could easily move back up to about 12.25 or so to test those prior highs. That would be about another 8% from where we are right now. Next up, I wanted to mention the specialty retailers, another group that has been sideways consolidating. And look at this. I mean, we had a beautiful uptrend, little cup, maybe a handle, although I like to see the cup get all the way up to the high, and we didn't see that. But no matter how you slice it, we're sideways consolidating. We're pausing, we're basing. I think this is great news for specialty retailers. And when we get a breakout above 2,500, I will be looking for leaders in this group to trade. So keep this one on your radar. Now, other groups have already made some breakouts. I want to show you, for instance, recreational products. So when you're looking at this, this was a group that did extremely well throughout 2020, made this huge move. But look at the sideways consolidation that took place for several months. Now we're starting to move. We're starting to get this higher high, higher low thing rolling again on recreational products. Just as we're heading toward earnings season, I think this is a really good sign for some of these recreational products companies. Let's do maybe one more here. Let's take a look at clothing and accessories. Clothing and accessories, you can see, went sideways for a couple months back in September through early November. With the vaccine news, we broke out, and we just broke out again coming off the 20-day test. So I think clothing and accessories looks really bullish, and I fully expect we're going to break back out above 400 soon here. All right, earnings spotlight. Couple of earnings out after the bell. First one is SNX. Really good report. Beat on the top line, beat on the bottom line. The bottom line, $5.21. The market was expecting $3.83. So a huge beat, but the stock was down 1% after hours. So maybe we'll get a 20-day test and bounce off of it. Relative strength here, not bad. I mean, it certainly could be better, but it is up near the high over the last 10 months. So let's see if we recover off of what could be an early gap lower. If we recover and break out, though, look for that relative strength. If that breaks out, could be a good sign here. And then Simulations Plus, SLP, smaller company, also had a pretty good report, beat on the top and bottom line. Bottom line was 12 cents versus 11 cents. You can see that we have broken out here, though. Accumulation distribution has been very strong, and relative strength. This has been a leader in software. Only problem is software has been struggling. But if you're going to go with a group that maybe isn't the best, you want to stick with leader. I think you need to stick with leaders no matter what group you're looking at. But this is a stock that has been leading, reported pretty good numbers. I'll be interested to see how it trades tomorrow. All right, we're going to wrap this up now with the three you must see. First one I'm going to pull up is U.S. Steel Group, USX. Starting to see that AD line move up. This is a stock that has done extremely well since the vaccine news came out. Look at this move from 10 and change up to 22, almost 23. Great volume coming in. Steel's moving higher, and this is becoming a leader. Stock definitely you want to keep on your radar. Next up, I want to talk about two banks. One, PNC, because I think PNC is, again, starting to show relative strength and is being heavily accumulated, in my opinion. There's your AD line. Here's the price action, taking out those February highs. And banks, as they move higher, you can see PNC just recently, a couple weeks ago, set a new 52-week relative high versus the banks. So this one looks good. One that doesn't look quite so good, and one that you really continue to avoid, is Wells Fargo. Wells Fargo making move to the upside to challenge that June high. Look at the AD line and look at the relative strength, really relative weakness. We've come off the bottom, but this has still been a long move lower in terms of relative strength. All right, that's it for me today. I appreciate everybody tuning in. Be back over at Earnings Beats on Wednesday morning for your next Trading Places Live. Have a great day, everybody. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.